Okay, this is a little demo of how I use Barchart. It's got a pretty typical user interface on the front page, but I go and use watch list and create watch list. This is the broad market. It's got the top four from the Spider, Qs, Russell, Dow, and then it's got its correlating inverse ETFs as well. And it's showing you that there's that short term, medium term, and long term on those four indexes that it's a sell. What that means really is it takes and just does the math and looks at these particular indicators that are just your stock indicators have been around forever. Everything from your short term 20-day moving averages and the MACD moving averages up to 200, and then 50-day moving average, and then 100 to 200-day moving average to get your long term. So short, medium, long term, and then trend spotter is a indicator as well. It also uses the math to come up with whether these indicators are signaling average, weak, strong, and then it puts it in. It compiles this data and puts it in an opinion. 88% sell. So when I've worked with my guys at Kinder Morgan, which is a big oil and gas, so they are not moving in and out very much. I'll tell them if they just want to be long term and not be very active, to just watch this. So Kinder Morgan, their watch list, if I sort it by long term, this is today, but I can show you, since there's no back testing available, I can show you that I took some screenshots for a while. It's not very consistent when I took screenshots, so there's some holes in it. I'll show you the holes in a second. But if you're just watching a long term, then really you would own this fund and Kinder Morgan, and you'd be selling this and not owning any of these. That's April 17th. In June, you'd own Kinder, you'd be selling this, you wouldn't own any of these. August 3rd, you'd be holding Kindle. If you had these, you'd be selling these and you wouldn't own any of these.
Order filled.
Oh, wow. I bet you I think I just bought some British pound. Now we're at August 12th. Same thing. 100%. You'd own Kinder. And August 29th, you'd own Kinder. September 12th, you'd own Kinder, and maybe you can start looking about buying the Russell 2500. If you don't own it, you still wouldn't move. You'd own Kinder. And then now we're at October 4th, and here's our first signal to sell Kinder Morgan. So since there wasn't any good back testing, I just created a little chart of Kinder. Here's the ones that I took snapshots here in April, June. So it was 100% own Kinder, hold Kinder. I don't know in this area if it would have had us selling Kinder Morgan, since it was below some of these moving averages. Maybe so, hold, and then on the and then 100% buy, or 100% own it. And then now in this area, which also there's not any consistency of when I took these screenshots, but I did email the Kinder guys about every 2 weeks. And then here's that 50% sell as of the 4th, yesterday. So from there you can tell that their menu to choose from is like going to a restaurant that's got nothing but bad food. Maybe one good dish, but you got to guess which one that is, unless you've got some tools to figure it out. Now let me show you some of the other watch lists that I created on uranium. I'm a big fan of it. I've been in it for quite a long time, and here's all the pretty much uranium plays that I put on my watch list. And here's the top four. I own a little bit down here, and This doesn't really guide me that much, but if I'm going to own some, I'd like to own it where that's all the indicators are saying to own it. And then I also did the growth, the chaos, and the cash flow. They're in the order that they're shown on your in your live portfolio. Oh, excuse me, screwed that up. There we go. And if we were to just sort it by short term, then there's definitely short and medium term. Everything looks to be indicator wise that we should own that. This Marathon Gold and the commodity index are the only ones down there, and we know something was going on with Marathon Gold. If we were to go to your chaos and sort by short term, the two short ETFs that, or the three short ETFs that we're in, are still indicators say good place to be. And the only thing that is 100% sell that's on the list is this new Pacific Metals indicator say don't want to be in it at all. Obviously cash flow, the cash flow is a little different, trying to accumulate as you go. Let me show you something that's really so my mom's, I've not been taking screenshots on hers, but she's worked at Amarillo College for years, and I've kept her in the top ones until it said to get out of them. One of the top ones is just a money market. So this is cash, and this was a BlackRock, and it was a commodity mutual fund. Well, about 6-8 months ago, got something in the mail that says that this BlackRock Life Path Index was being removed. So it was removed. This was Mom's 403B. So now here's her new menu. And let me just sort it by opinion. The only one that was doing any good, besides being in cash, was the one that they removed. So that's being held by, the plan provider is this July company. She worked for Amarillo College, and it's interesting that I've had her in cash since January. And, they've been raising interest rates, and look at the dividends increase. Here's March, and here's the last dividend that was given by the college just based upon interest rates going up. I just found that interesting. That's all. This is Mitsubishi's 401k, and this is their menu to choose from. And it's sort of hard to give a good demo without being able to provide nice back testing, because everything is really, the indicators are saying don't own any of this stuff. And it's going to be that way. It's been that way for quite a while because we're in this bear market. But at one point or another, you realize that if we've got the S&P 500 turning over, and let's go to a year. If the indicators and this bar chart indicators would start showing sell signals in this area, and that's what it did. I was able to get some people, because most of these funds, this bad menu that everyone has to choose from, is pretty highly correlated to the S&P 500. So the S&P, it would start having sell signals in this area. It would give weak buy signals on these bear market rallies, and strong sell signals. This one's the weak sell signals still never turned to green, so there was no buy-in at this area. And then now obviously most of those funds are correlated to S&P. I believe it's a shame. I believe it's a damn near a crime that everybody who's waiting for their or continue to put money in their 401k They're into their IRA, and these large companies are giving them a menu to choose from that is damn near toxic food. There's hardly ever any good things on there when we're in a bear market, even if it's just a mild or flat, mild bear or a flat sideways markets. It's just terrible. They don't put commodities in there. So, in a nutshell, what I'm saying here is I would love to be able to provide data, education to people that don't want to be active traders. I'm an active trader, and if somebody was able to make 3 or 4 trades that are or changing of their position and allocation 3 or 4 times a year, a lot of people won't even do it. Many of them don't even log into their account. Okay.